Now we're going to go examine some exchanges that stocks are traded on. The first one we're going to look at is the New York Stock Exchange. This is considered the biggest, most important exchange in the U.S. Some of the parts of the New York Stock Exchange which make it very valuable is that it's actually located on Wall Street in Manhattan. It's the oldest, most reputable exchange and has very vigorous standards for getting into this one. So when you guys are looking at companies, the New York Stock Exchange is going to only carry companies that are very, very reputable. A lot of the things that they have, you must be a company, you have to have, well, getting a seat, you have to have a stock value of over $100 million and have earned more than $10 million over 3 years. These are the big reputable companies, great for long-term investing, but when you're doing this project, I would probably stay away from a lot of New York Stock Exchange companies, especially well-reputed or bigger, more well-established ones. There are other different exchanges besides the New York Stock Exchange. There's the American Stock Exchange and the NASDAQ Stock Exchange. We're going to go over a couple of those. Simply the American Stock Exchange, a smaller one, but it deals with a variety of brokers, most in energy and utilities. Not really a great exchange for you to make really quick money because we're looking to make money quickly. You have about 3 months to make it. This may not be the exchange for you. Where I would like to see you guys do is a lot more of this cyber exchanges. This is the exchange that deals with more up-and-coming companies dealing with technology and startups. They're all over the counter. They're traded and sold online. It's all fully automated. It is known as a stock market for the next 100 years. I love the NASDAQ exchange for more of your startups and tech companies, so a great spot to look. Some more examples right there. There are definitely other exchanges. As you start to do more research, you're going to look at all the other exchanges around the world from the Tokyo Exchange. Here's an example of all the other markets that are going on, happening throughout the world. We check on these all the time because as markets close for the day, they tend to really ripple effect across the ocean. As you look at the Japanese market already, this opens in 3 hours. You get done with the S&P, this is going to close in 15 minutes. So right as one market closes, it starts to ripple effect into other markets. And so now we're going to look at some industrial averages. The most famous industrial average we're going to look at is the Dow Jones Industrial Average. This just measures the top 30 publicly traded companies in the United States and gives us an index or a gauge on how well the companies are doing based on the day's trading. You'll see if you ever watch the news, they're going to be reported the Dow Jones Industrial Average is up or it's down. It's just our really best gauge on how the overall U.S. economy is doing. Another one we like to look at, probably gives us a better index of how the U.S. economy is doing, is the S&P 500. It takes the top 500 companies, and it's a better indicator of overall economic health, where if you compare the Dow Jones, which is just the top 30, the S&P is the top 500. Again, we're going to look at this. We'll do this in class, but how to actually read a newspaper stock report. You guys mostly will not be doing any newspapers anymore. Almost everything we're going to be doing is online or automated. You can look on your smartphones. They have apps that tell you exactly what your stock values are at the minute. But old people like me, this is what we grew up looking at and how to read it. We'll have this on the quiz. I'll help you guys with this later. Couple things as we look at stock market. The stock market, again, was not always fully secure, so the U.S. government decided to come in after FDR and the Great Depression to have an agency called the Security and Exchange Commission. We'll be calling this the SEC. They were designed to keep the market safe because, as you know, the Great Depression was caused by investors buying on margin and without having the liquid assets. The SEC just ensures that stock traders, brokers, companies are all following the rules. But in the last 10 years, there's been another major, people that cheat the market, and those, of course, are your Ponzi schemes. We'll spend some more time going over these Ponzi schemes. Guys like Bernie Madoff, Tom Petters, these guys have found ways to bilk billions of dollars off investors by promising massive rates of return, and they've hurt other people by doing that. Bernie Madoff, again, is probably the most famous. He defrauded investors over $65 billion. Not a good man. There's other people that are in this. I always look at Nevin Shapiro, another guy who just used these Ponzi schemes to make a bunch of money and to hang out with the University of Miami, illegally give money to the program. Not cool. Another way to do it, looking at how Ponzi schemes work, you start with one schemer, you give somebody, then they invest in you, you pay them back huge rates of return, who in turn gets more investors. It's a classic pyramid scheme. It works great until someone asks for their money back. Another thing we're going to be looking at is, again, brokers who do insider trading. Your most famous insider trading inside America in the last 10 years was, of course, Martha Stewart. She had insider information that her pharmaceutical company was going to lose money. Her broker told her to sell. The SEC thought it was weird that she sold before everybody else had information that the drug company did not pass its FDA approval, and she spent a little bit of time in jail. Don't feel too bad for her. She's doing quite well herself. Another firm that has done is Enron. Enron was an energy firm down in Houston that defrauded investors by lying and actually causing rolling blackouts in California, and just cooking their books to make it seem like they had more profit than they did. And this is kind of what happened to Enron. They lost their stock values, just plummeted down here to about 1 cent. The problem is all the people that worked for Enron had stock options, and that was their planned retirement. Enron's value decreased dramatically, and all this profit up here turned to absolutely nothing. And Arthur Andersen lost their job because they were the accounting firm that actually cooked the books and falsified the information. Some of the problems, of course, when there's all this fraud, employees and average people that tend to be the ones that get hurt. All their 401k is gone, their jobs are gone, and the CEOs kind of walk away unscathed. Another major thing that we talk about insider trading in Congress. Congress has the ability to insider trade because most congressmen sit on important seats inside of in important committees, and a lot of these committees deal with the FDA and the USDA and companies that are trying to pass their patents and get their products passed by the government. And there are certain congressmen that have insider information. They tell their broker to go buy the stock, and they become millionaires. And we have a Minnesota politician by Tim Walz would like to see congressmen pass the Stock Act, which would not give Congress insider information. As of right now, they all get it, and so it becomes a millionaire club. And then that is going to be it. We will spend some time on mutual funds, but for the most part, you guys will probably not invest in your personal life in stocks. You will probably invest in mutual funds, 401ks, 403bs, but that is going to be it for the stock market.